This is Dan Stewart, and this is your NORAM Asset Management Market Update, Friday, June 9th, 2010. Well, we had another rally on Wall Street today. The Dow was up 58 points, the S&P was up 7.5, and the NASDAQ was up 21. The S&P and the NASDAQ percentage-wise were up about 1%, with the Dow being the laggard, up 0.75%. But the main thing you need to watch for next week for a follow-through, folks, is the volume. The volume on the NASDAQ was 3.8 billion shares today, and on the NASDAQ it was 1.5 billion just before the close. So those numbers might go up slightly, but they're still below the 30-day moving average. And for a sustainable rally, we want buying demand on increasing volume. We didn't get that today, but we did get a rally. That's the main thing. Gold was up $13.80, making a comeback, up to $12.09. Silver was up 20 cents to $18.05 the ounce, and oil was up 75 cents to 76.19. On the currency front, the US dollar was up against all three major currencies, the pound, the yen, and the euro, and treasury yields were up. The 5-year was 1.84, 10-year was 3.06, 30-year was 4.04. People were moving out of bonds, out of treasuries, and into riskier assets, into stocks. That trend has been going on for the last few days. Therefore, bond prices are going down and yields are going up. Over in Asia, the Asian markets were up across the board. Not huge, but pretty nice. The Asia Pacific Index was up 0.75%. The big winner was Shanghai. After having a big sell-off, it was up 2.5% today. The Hong Kong Index was up over 1.5%. Now folks, the Shanghai Index is the one that's been down the most across the world this year. It was down over, it has been down over 20-some-odd% this year. It's very volatile. The South Korean Index pulled back after their central bank announced a surprise rate increase. They increased rates by 25 basis points up to 2.25%. Nobody was expecting that one. Over in Europe, the European markets were up across the board, but just marginally. The Euro-Pacific Index was up 0.5%, and most countries were up between 0.5% and 1%. The only one up just over 1% was Italy. The European Central Bank, the ECB, has said they are going to end all aid programs. My question, how will Europe do without any life support? Also, there's a lot of rumors that the EU stress test, the bank stress test, were shouted with secrecy and there wasn't a lot of transparency. Also, it really wasn't much of a stress test. It didn't measure for a big downturn or a black swan event. It was just an economic pullback or an economic downturn. That was not my understanding of a stress test. I thought a stress test was to measure a major calamity. Just one person's opinion. This is Dan Stewart for your NORAM Asset Management Market Update, Friday, July 9th, 2010.